Okay, grade 10s, we are now back and we are going to continue with forms of ownership. Now guys, this is a very technical section and there's a lot of information and detail that you guys need to know here, and unfortunately it's very abstract. So there are a couple of things that we need to explain to you. It's not something that you can just do on your own. This is a very technical section of work and I hope that I can help you understand this, and of course this is part of business ventures. Right, so without further ado guys, we are going to look at forms of ownership. Forms of ownership of course means it or refers to the legal position of the business and how it is owned. Now that will become clear a bit later as we explain certain concepts to you. Now as you can see in this picture, guys, this is mostly what you need to think about when you first start a business. Which form of ownership is this going to take? Now guys, I know for a fact that you guys use the word company, for example, as a overarching word meaning business. Now guys, if you speak about a company, you are actually speaking of a specific form of ownership that has certain legal implications and certain things that it can and cannot do. So a company is not just a word for another word for a business. Another word for any type of business is an enterprise or a business, but you cannot use the word company for an overarching word for a business. So just keep that in mind. Right, now guys, there are certain key concepts. Now if you look at your booklet that you guys have got, your workbook, there are more key concepts there. I've only taken out a few that I think is very pertinent for you to understand this section of work. The first one is the concept of continuity. Now guys, continuity refers to the ability of a business to continue to exist even if there's a change of ownership. For example, a member or a shareholder that dies or retires. Now you will see that certain forms of ownership cease to exist when the business comes to an end, or when the owner dies or retires, or something happens to the owner. Then that business also dissolves, because the owner and the business is one and the same thing, and that is part of a concept that I'm going to do a bit later with you. The next one is securities. Now guys, the concept of a security means the shares or the bonds that is issued by a company. Now guys, a share is a portion of a business that a person holds, and that makes you part owner, and that is specifically referring to companies, not partnerships or CCs or any of the other ones that we are going to do. It only refers to companies. Right, the next one is a very important concept, guys, and that's the concept of limited liability. Now guys, a business that has limited liability means that that business has a legal status. It can exist separate to its owners, and it takes responsibility as if it is a natural person of all its debts. So the owner is not responsible for paying the debt. The business is responsible for paying the debt. So therefore, if the business goes bankrupt, the owner's assets cannot be attached to pay off the debts of the business. That is limited liability and is only applicable to legal persons, and that concept I will also do with you in this section. Right, unlimited liability is the reverse. That is where the business doesn't take ownership of the liabilities, the debts that it has made. The owner is liable for repaying of that debt. So when the business goes bankrupt, they can attach the owner's assets to pay for the debts of the business. Right. The next one is a concept of a company, and as I said to you earlier, a company is a specific form of ownership. It's a type of a business structure that has a separate legal entity from its owner. So with other words, it exists separate to that of the owner. Now, if you think about Coca-Cola, for example, the Coca-Cola company exists even since before the 1900s. I think it was started somewhere in the 1880s. The original owners don't own Coke anymore because they're long time dead, but the company still remains in operation because it exists separate to that of the owner, because it is a company. Right. And then also, companies are not managed necessarily by the people who own them, the shareholders. A company is managed by appointed people that is appointed by the shareholders to manage this company on their behalf, and they are called directors. The people elected to the board of a company by the shareholders to represent the shareholders' interest in the company. Right, and then guys, this is something that I have added. It's not in your key concepts in your workbook, and that is the concept of a legal entity. Now guys, in law, we actually make a distinction between two kinds of people. We have natural people, which is like you and me and Mr. Edwards. We've got arms and legs, we breathe, we can open bank accounts, we can sue other people and be sued by other people, we can make debt and we are responsible for repaying that debt. That is a natural person. Now some of these rights or attributes of a natural person in law we also give to a construct or an entity like a company or a CC, and we call that a legal person. Now a legal person can own its own bank account, it can sue other people and be sued, it can most definitely make debt and they are responsible for paying their own debt. Now that is a legal person, and that is that abstract concept that you need to understand in order to understand anything that we do in forms of ownership. Right, a legal entity is a business that can exist separate from its owners. Right, now guys, we are also going to look at different forms of ownership. Some of the first two that you normally do when we start with forms of ownership are not legal entities. These are sole traders and partnerships. There is no distinction made between the owners of these businesses and the business itself. It's all one and the same thing. So therefore, in a sole trader or a partnership, if something would happen to the owner, that business also dissolves because there's no distinction between the two. But in the other legal entities that we've got on that list there, closed corporations, private companies, personal liability companies, public companies, state-owned companies, non-profit companies, and cooperatives, there's a distinct difference between those that own it and the business itself. It's separate legal people, and therefore it can exist separate to that of the owner. Right. Now guys, there's also what you need to be able to do is to distinguish or differentiate between a profit and a non-profit company. Now guys, whenever you are asked to differentiate, the best thing to do is to draw a table to show the differences. Now I've got a table there. If you look at your screen, we've got a profit and a non-profit company in two different tables. Right, now in a profit company, the company is formed with one aim of making profit. Now of course guys, now I need to show the difference between a profit and a non-profit company, and the difference is this company is formed for charity purposes or to promote social and cultural activities rather not making a profit. Now guys, therefore I also drew that little line there so that you can see that whenever you need to differentiate, the difference must be clear. The marker needs to clearly see that you know what is the difference between a profit and a non-profit company. So therefore, if you look at these two bullet points, they speak to one another, and that clearly shows that there's a difference between the two. Right, the same with a company incorporated for financial gain for its shareholders, and a company that is an association, incorporated not for gain, and you can see the difference again very clearly. Now I can just carry on and I can show you the rest, and you guys can clearly see the difference. Now guys, I've also put in there just for visual representation. Profit companies are normally these things that you guys frequent often, like going to the grocery store, like Spar or Pick and Pay or whatever, Coca-Cola company. It is there and it exists not just to deliver a service to you, but in the process of also generating profits. Non-profit companies are solely there for delivering a service to the community. Oftentimes that couldn't be done by government. And now you can look at businesses like, or companies, non-profit companies like the Cancer Association of South Africa, that invest in research and educate people regarding cancer, and also support those who are in that's cancer sufferers, to help them. And that is the sole purpose why they exist. Right. Now guys, the first form of ownership that we normally do with you guys is a sole trader or a proprietor. Now, if you think back to what we have done just now, a sole trader is not a legal person. A sole trader, the sole trader and the person and the business is exactly the same thing. Right. Now, guys, in your booklets, you were required to fill in the missing word. Now, a sole trader is a business that is owned and managed by how many people? It says sole. Sole means one. So, with other words, one person. The owner is responsible for the activities and the decisions of the business, guys. He's the only person. He makes all the decisions of this business. He doesn't have to share any responsibility with anybody else. Right, the sole trader mainly depends on his own resources, and the business is generally small scale businesses, guys. These are typically your things like your home economic shops and those kind of things. Now, guys, it is so easy to start a sole trader that when you sell cupcakes at school, the moment that you start doing that and you're taking the profit for yourself, you are actually a sole trader. All you need is the permission from your headmaster or your deputy headmaster that you may in fact do so, and that is all you need in order to start your business. Right. The next one that we are normally looking at is a partnership. Now, guys, a partnership and a sole trader is actually the same thing, except for one difference. A partnership consists of more than one person, but it's still not a legal entity. If anything should happen to any of the partners, that business has to dissolve because there's no distinction between the business and the owners of that business. Right, so let's look at your missing words. A partnership is an agreement. Now, it's normally formed when you are in agreement with another party and you agree to form a business for mutual interest. Now, guys, let's take that example again of you selling cupcakes at school. If you have an agreement with somebody else to say, okay, they will provide the ingredients, you will provide the cupcakes, you sell these cupcakes together and you split the profits between you two, you are in a partnership. That is how easy it is to start. Right. It is an agreement between two or more people who combine labor, capital, and resources towards a common goal. The partners may be individuals, businesses, or combinations. Right, partners share the responsibility of the business and they share the financial and management decisions. Now, guys, in a partnership, there are more than one person that needs to be consulted when they make decisions because they are all in it for the same purpose, which is not the same case as with a sole trader. Right. Now, guys, the first one that we are going to do that is a legal person is called a closed corporation. Now, you probably have heard from your teacher when they did the section of work that closed corporations cannot be formed anymore unless you buy what they call a shelf CC. Now, I'm not going to go into those details, but guys, the whole idea behind a closed corporation was to give legal status to small businesses. It was never meant to become a big business, but it's still a business that requires, or it still gave the owners of those business limited liability. The business takes care of its own debts, and that was the whole idea. So you will see that there is a limit to the amount of people that may incorporate a closed corporation. So let's quickly fill in your missing words again. A closed corporation or a CC, the name of a CC must always end in the letter CC to show that you are dealing with a closed corporation. Is a legal entity with a legal personality. Now, I have already explained to you the concept of a legal personality. It is a business that is owned by members. Now, guys, here we don't speak about partners. The moment that you hear the word members, we are referring to a CC. CC has members. They don't have shareholders. They don't have partners. They have members. So please, these little detail things are very important for your test and exams. Right, it is a business that is owned by members and can have between 1 and 10. Now guys, that 10 is incredibly important to know. The moment that you have more than 10 members, then that CC loses its legal its limited liability status, because it has then become a partnership unless you want to register this business as a company. The idea behind this was always to keep the business small, but to give the business a legal personality. Right. The CC can be, the word there was managed by individuals and or other entities. Now guys, I actually don't think that that is correct. As far as I know, that only natural people may incorporate a CC. There may not be any other entity that holds an interest in a CC. The word close means that all members are involved and participate in its management. Okay. Right. Private company, the words or the private company's name must always end in the letters Pty, limited, or proprietary limited. Okay. A private company is a company whose shares may not be offered to the, and the word there is public. Now guys, the reason why it's called a private company is because it is only private individuals that incorporate or start this business that may have shares in it. It may not be offered to the public, because in a private company, all shareholders must be in agreement that a share may be sold to somebody else. So if you have 20, 30, 40 partners, it's going to be very difficult to get their permission to sell your share to anybody who you like. It may not be offered to the public for sale. It is only between the people that started and run this company. It is illegal, of course. The word there would be entity, which I've already explained to you, and its operations are less strict than those for a public company. Now guys, later on we will do a public company and I will explain to you what the difference there is, because the difference is actually quite vast. Right, a private company is a company that is privately held for, and the word there is small businesses. Now guys, I know for a fact that VW South Africa is actually a private company, and so is Debonair's. These are not small businesses. They can become very, very big businesses. The only difference is that share may not be offered to the public to buy, and it will become clear once we do public companies. Right, the last one, it must register as a, and the word there is taxpayer in its own right. Now the reason for that is a company exists separate to its owners. It's a person all by itself, and therefore is also eligible to pay company's tax. So a company, because it's a legal person, must also pay tax just like any other person would. Right. Now it brings me to a personal liability company, and the word or the letters INC or incorporated must appear at the end of the name of any personal liability company. Now guys, I'm going to make it very easy for you. A personal liability company and a private company is actually exactly the same thing, with one difference, and that is that the directors, not the shareholders, the directors, past and present, of a personal liability company can be held liable for the debts of the business. Right, and in a private company that is not necessarily the case. Right, my animations didn't work out quite so well in this particular slide. A personal liability company is mainly used by and they say their associations such as lawyers and accountants. It is normally professional people that start personal liability companies. And the word there that we are looking for is name. The name of the personal liability company ends with the letters or abbreviation INC, that stands for incorporated. Right. Directors of the company as well as previous directors will be responsible for the debts of the company. But guys, please don't think that all of a sudden a personal liability company doesn't have limited liability. It does. The shareholders are still not liable for the debts, but if you happen to be a director of that company, then you can be held liable for the debts of that business, because you are the person in charge of making the decisions where this company goes. So that is very important to remember. Right. Now guys, the next one that we are looking at is public companies. Now guys, I told you that there's a very big difference between a public and a private company, and I will explain to you where the difference comes in now. The public company is a company that is registered to offer, and the word that we are looking for there is shares and stock to the general public. Now guys, a public company doesn't have the same restrictions as a private company, where they have to get the permission of all the shareholders before they can sell a share. A shareholder can sell a share to anybody who they wish, whenever they want, if they want to get rid of their stock. And they normally do that through registering this company on the Johannesburg Securities Exchange. And that is where stockbrokers buy and sell shares in these massively big companies. Now guys, a public company exists for one reason only, and that is to generate large amounts of capital to run this business and to expand and to invest and grow. That is the only reason why you would register a public company. Right.
If you don't mind if I add something there, just to give you an example. Facebook, Mark Zuckerberg, you probably are aware of that individual, and initially that was a private company, but when they decided they wanted to expand, Mark Zuckerberg and the other directors of the private company at that stage, Facebook, decided that they were going to go public. And we all know what happened when they did go public. They bought the likes of WhatsApp, they bought Instagram, and now they really are the forerunners of social media across the globe. And they were only able to purchase those businesses because they went public, and they were able to gain access to the large amount of capital that Mr. Van Zyl is referring to. So that was just a practical example of a public company and why businesses go from a private company through to a public company.
Thank you very much, Mr. Edwards. That is actually a very, very nice example of why we would start public companies. Just one thing though, Mark Zuckerberg gave up actually a lot of control over the company in doing so, because all of a sudden the other shareholders, which is there's now plenty of, also all have a say in who is appointed as being directors in these
Correct.
businesses. So, and of course, all of those people also need to share in the profit.
Yeah. And
so,
with regards to all of these forms of ownerships, when you're looking at the characteristics like we are now, you can almost identify which are going to be advantages, which are going to be disadvantages. Obviously, a public company, big advantage is the capital that they've got access to. Whereas, as Mr. Van Zyl is referring to, the owners do give up some of the control that they've got because they are gaining access to that capital.
Right. Okay, guys, I'm going to continue. Of course, the missing word for the second bullet point: public companies are trading in an open market called the Johannesburg Securities Exchange to raise capital, where anybody can then buy a share in a company. Right. The next one: ownership of a public company is distributed among the shareholders through the free trade of shares and stock. Now, guys, we say that a public company, the shares are freely transferable. I can sell it at any point which I want, if I no longer want the share, to anybody who I want to sell it to. But in a private company, the shares are not freely transferable because I need the permission of all the other shareholders. Right, it brings me to a state-owned company. Now, guys, state-owned companies are companies where the majority of the shares are owned by the government or the Department of Public Enterprises. Now, guys, I'm going to go through this as once again fill in the missing words. In a state-owned company, and the word there, of course, is government, is a major shareholder, and it falls under the Department of Public Enterprises. Now, guys, if they say major shareholder, they own the majority of the shares, so government decides who is appointed to the board of directors, and therefore it is managed by the Department of Public Enterprises. Right, the companies perform specific, and the word that we are looking for there is functions, and operate in accordance with a particular act. And the last one, they take on the role of commercial enterprises. They also do so for profit, guys. This is very important, and that profit subsidizes all the other tax income that government also needs to get as a commercial enterprise on behalf of government. Now, guys, I've also got some examples for you. One that is in the news now quite often is Eskom with the load shedding. That is, of course, a state-owned company. Another one that you probably have heard of is the weapons manufacturer Denel. And there's also another one, Transnet, that is all the railways and rail transport, and also the ports of the country resides under Transnet. Right, now, guys, it brings me to non-profit companies. Now, guys, a non-profit company does not exist for the purpose of making profit. It is there to deliver a service to society that is oftentimes not being, or where the state is not capable necessarily in delivering that service. The aim here is not to make a profit, but only deliver a specific service. Right, so let's have a look at your missing words. A non-profit company is a legal entity organized and operated for a collective, public, and the word that we were looking for there, of course, is social benefit. Right, they include churches, charity organizations, and culture organizations. And the primary objective of an NPC, a non-profit company, and the name, of course, needs to end in the letters NPC, is to, and the missing word there, of course, is benefit, not to make a profit. That's there to benefit the public. Now, guys, once again, maybe some of these non-profits that you might be known to as the SPCA, and of course the other one I've already mentioned is Cancer, or the Cancer Association of South Africa. Right, now, guys, the last form of ownership that you guys need to know is cooperatives. Now, guys, if you look at the word cooperative, it means to cooperate. It's people coming together to share resources, to cooperate in something. And you oftentimes see this in agriculture, where you make use of cooperatives. Now, I'm quickly going through your missing words here. A cooperative society is and they have the missing word there's voluntary association that is established with the aim of service to its members. Now, I'll explain to you at the end exactly what I mean by that. It is a form of business whereby people with a similar, and the word there is interest, link for promotion of common goals. And then a cooperative is a traditional way for a group of interested parties to get together and the word there, of course, is pool resources or infrastructure and costs to achieve a better outcome for all of those involved. Now, guys, I've got a picture here of farmers. As I say, your cooperative is mostly associated with agriculture, although there are many other different types of cooperatives. Now, if you look at these guys, these are small-scale farmers, and they will find it very difficult to compete in the commercial farming field, where you've got large and established businesses that can dictate price, and they can dictate where the markets and so forth. Now, when you have a load of people that are small-scale farmers that come together and pool all of their resources as if they were one big, large unit, then of course they all have a shot of competing and sharing in the market forces, and that is why you would have something like a cooperative. Right. Now guys, in terms of your tips here, you should be able to identify different forms of ownership from case studies or scenarios, cartoons and pictures. Now guys, if it comes to companies or forms of ownership, a nice tip here is to look at how the name ends. If they have a word or at the end of the name of a scenario CC, then you know it is closed corporations. You look at the details like 1 in 10, or it can have a maximum of 10 members, then you know already we are referring to a CC. Or if you look at they cannot sell their shares, it's a company that cannot sell shares on the JSE, then you know we are speaking about a private company. So those little details are important. Okay, now guys, I'm quickly going through possible test questions that might come up. Now guys, you would see that in the sake of saving a bit of time, I did not answer all the questions that you received in your booklet, only some of them. And I've chosen them in such a way that we have different types of questions that you might get, and it will give you an idea of how those questions, of course, is marked. Right. The first one is outline the characteristic of a sole trader. Now guys, there's two things that I want to say that you need to look out for. Of course, is the word outline. That is your action verb. I've underlined it for you so that you can see. And the second thing, I'm not sure if there's an animation in it, but is your mark allocation of 6 marks. Now guys, outline requires a full sentence, but it is actually a lower order question, and it only requires an essence of a sentence. A full sentence nonetheless, but there's no statement and qualifier needed. Now, it still counts 2 marks, and the marks are awarded at the end of the sentence. So if you look at the mark allocation of 6, the only amount of answers that you need to give is 3 separate facts. The first one, legally, the sole trader and the business are not separate entities. That is a characteristic of a sole trader. And as you would see, the second one, a sole trader may be started without performing any legal formalities. Remember the cupcake example that I've given you. And the last one, in a sole trader, business liability is unlimited, or the owner is responsible for all the losses arising from the business. Now guys, there are more characteristics, but I'm trying to show you how to think when you're answering a question in a paper. The mark allocation was 6. I only went with 3 different bullet points, 3 that I think makes the most sense to me, and that is why there's only 3, because you can see that the double marks are added to the end of the sentence. 2 plus 2 plus 2 equals 6. Right, the next one is a scenario question again, and that says read the scenario below and answer the questions that may follow. Now you've got a little small case study there from Mercy Dressmaker. Now the first thing before we're going to read the case study is we are going to look at the question, and the question says identify the 2 forms of ownership mentioned in the scenario. So the first thing is your action verb that says identify. So I don't need to explain it, I just need to find the definitions or find the characteristics from the case study. Right. The second thing that I'm going to look at, in many cases I've seen this, kids start or stop by just looking at that, and they identify and they forgot to read the next part of the sentence. So the next one that I'm looking for is motivate. I need to motivate the answer. How should I do that? by quoting. Now guys, this is very, very important. Okay, and then it says use the table below as a guide to answer your question. Now the next thing that I've always said to you guys that is important to remember is your mark allocation of 6. Now guys, now that we know what is going to be required of us, we are going to start analyzing this case study now. So the first thing that I've done is I've underlined the important bits. Mercy is the owner of the business. Right. How many owners are there? Only one. So now I already know that it cannot be something like a partnership. And the second one is she requested Mercy to form a joint business venture. Now remember, I need to identify 2 forms of ownership. Right. And now I'm going to draw the table. I didn't see anything there that has specifics to names or anything else. So now I know Mercy is the only owner. So that means that she is a sole trader. You can see that the name doesn't have any other particulars like a CC or a PTY Ltd or an LTD or whatever attached to that. So I know that it is not any one of those. So it can only be a sole trader. Now guys, the second part of the question asks you to quote. Now when you quote, as we have said earlier in the previous section of work that we've done, you need to quote verbatim from the case study. You cannot use your own words. It must come from the case study. And of course, if you see the answer there, the motivation, Mercy is the owner of the business. It is verbatim from the case study. You will see that you will find 2 marks for the identification because you had to apply your knowledge to the case study, and the 1 mark is for the quote. And the same with a partnership, and you can see the entire sentence quoted there. Matomi, the owner of a gents outfitter, requested Mercy to form a joint business venture that will be named M&M Boutique. Guys, it is important to look at that name. That M&M Boutique didn't say CC, PTY Ltd, LTD, or any of those other things incorporated. So there's no restriction on the name, so that's what gives it away as being a partnership.
Mr. Van Zyl, if I can just add something there. I want to stress how important answering this type of question is, because usually there are follow-on questions based on your assessment or your identification of the form of ownership in this instance. Okay, so if you have identified it as a sole trader, there might be additional questions, maybe talking about discuss the advantages of a sole trader. And if you have identified it incorrectly at the start, that will affect your follow-on questions later on, because you might be providing the incorrect advantages. Maybe you're providing the advantages of a private company when you should be providing the advantages of a sole trader. So just keep in mind how important this sort of question is and getting it right at the start.
Right. Mr. Edwards, thank you very much for mentioning that. I think this particular question has that kind of thing going for it. Now, guys, unfortunately, in business studies, we don't mark like you would do in accounting, where you mark with a mistake, or in mathematics, you've made a mistake, but we still carry on to see if the steps have been done correctly. We don't do that. If you've identified it here incorrectly, and you correctly give the characteristics of the incorrect identified thing, we are just going to mark the overlap where they are similar. But unfortunately, you're going to actually lose those marks too. So it's very important to read these things very carefully to make sure that you don't make a mistake here. Right. Now, guys, you can see exactly as Mr. Edwards has said, there is a follow-on question on those identifications that you've just made. Explain the difference between the 2 forms of ownership identified in question 3.3.2.1. Okay, that is the numbering as in your booklet. Now, guys, once again, it is very important to look at the verb. Explain the difference. Guys, you need to now clearly show another way to ask this is to differentiate. You need to explain the difference between the 2 forms of ownership. And guys, the moment that you need to differentiate, the best thing to do is to draw a table. Right. A table will clearly show you the difference between two concepts. Now guys, the next thing, I didn't circle it, is you need to look at the mark allocation. In this case, the mark allocation was 8. Explain, of course, will have a split mark. And guys, you will now see why 8 marks require only 2 differences. Because 2 of the marks will be for the one concept and 2 of the marks will be allocated to the next one. So a sole trader is an individual, that is your statement, who owns a business entirely by him or herself is your qualifier. Now in a partnership comprises 2 or more people, and that is your statement, intending to make a profit. Now guys, you can see that these 2 things speak to one another, and it clearly shows the difference. The profit goes to the owner. It was very difficult to actually get a statement and qualifier in there, but that is how it would have been marked. Profit is shared amongst the partners. How? According to the partnership agreement. That's your second mark, and that will give you 8 marks. So 2 differences for 8 marks, if that makes sense. Right. Once again, guys, we've got some helpful tips here. The difference distinctions do not have to link, but they must be clear. Now, guys, that they must be clear actually says to you that it must link, because otherwise you're going to speak of one concept here and another, and that doesn't clearly show that you know what the difference is between the 2, and then we can't mark that. We only mark one of the concepts, not both of them. Right. Now guys, there's also there the differences between a private and a public company. The same kind of things here, guys. They need to speak to one another. The private company may not offer shares to the general public, but a public company trades its shares publicly on the Johannesburg Securities Exchange. Now guys, I've already gone through most of these things, and as you can see, to differentiate between things, you just take the characteristics of the one and the characteristics of the other, and you only take those things that clearly shows a difference. Guys, if you told me that a private company is a legal person, and you say that in a public company is also a legal person, that is not a difference. That's things that are the same. So you need to clearly show what the differences are. They may not offer shares to the general public, and a public company trades its shares publicly on the JSE.
Mr. Van Zyl, if this was for 8 marks, so what would you be providing as your answer?
Right, that is a very important question. Now guys, if this was for 8 marks, I would go for 2 differences and ones that makes the most sense for me. And I like the fact that you asked for 8 marks. Guys, I wouldn't remember more than 2 differences. I would only remember 2. It might be that in section C, this question might count 12 marks and you had to know 3 differences. But the problem is, or in section C, you make up the marks somewhere else. In section B, you're not going to get a 12-mark question. In fact, it's very rare that you will get an 8-mark question. So to cover yourself, remember 2 differences that makes the most sense. I would go for the first bullet point because that's actually the biggest difference. They may not offer shares to the general public. That is a private company. And the public company trades its shares publicly on the Johannesburg Securities Exchange. And then, guys, one that is really, really easy to remember. The name of a private company must end with Proprietary Limited or Pty Ltd, and the name of a public company must end with Ltd. It is as easy as that to remember. So that's the 2 that I would choose to do. Right, guys, I'm moving on. Again, yet another scenario question. I like the scenarios for revision because it's the only place where you really have to apply and not just remember facts. Right, once again, guys, I'm going to firstly read what the question wants me to do. It says identify the form of ownership for 2 marks. And then the second question says, name the document that will enable Manda and Sabian to register the form of ownership identified in 3.4.3.1. And now I'm going to just go and check the verb identify. Identify doesn't require me to explain anything, just to give the concept that is applicable here. And then I'm going to look at the pertinent fact. The directors are liable for the debts of the business, and as you can remember from personal liability companies, that is the one thing that makes it different to all the other companies. Okay, a personal liability company, of course, then is the answer. Now, guys, as Mr. Edwards warned you, if you said to me that this was a CC, then your follow-on question would have been wrong. But if you knew this, name the document. Of course, guys, name doesn't require you to explain what the document is all about. You just have to say what it is. And of course, the memorandum of incorporation is the correct answer there. Right. Now, guys, the next question is discuss the characteristics of the form of ownership mentioned in 3.4.3.1. As you can see, once again, a follow-on question. If you identified it as a private company, then many of the characteristics that you are going to give might be wrong because it is not the same thing. Right. So, of course, guys, the first one is discuss. The action verb is very important because we now know that it's going to require a split mark. Then what you need to look out for is the mark allocation, which is 6 marks. So that means I'm going to need how many bullet points? 3 characteristics. And there they are. A personal liability company is required to have a minimum of 1 director on the board of directors. Now, guys, that is the same for a private company. So if you would have identified the company wrong and you answered that as a private company, that is the same fact for both of those companies. So we would have still given you the 2 marks for your question. Right, a personal liability company must end with the word or the abbreviation INC. And if you can't remember it, there's a nice picture for you to remember it by. Directors have unlimited liability, and they are jointly liable for the debts of the business, even if they are no longer active in the office. So, guys, they say in other definitions, directors, past and present. That means I might have left the business, but now it's bankrupt because of decisions that I've taken when I was still there, and they can still hold me liable for those debts. Right. Now, guys, that brings me to the next concept, and that is the concept of quality. Right, it's also part of your business operations section of work, and guys, this is a very, very important topic. The reason is it carries through to grade 12. You're not going to really do much of quality in grade 11, but in grade 12 it is a section all on its own. And I know from experience it's a badly answered part of the question paper in grade 12 because people forget these concepts because it can be quite technical. So this is one section that I would pay particular attention to if I were you. Right, so let's quickly go through this. Guys, there's a couple of key concepts that you guys need to know. The definitions, of course. Quality refers to how goods and services satisfy specific needs of customers. Then we are going to look at quality control, quality assurance, and we are also going to look at the different business functions and their quality indicators that you need to know very well before you can answer this. And then, of course, also quality management. Now, guys, there are a couple of concepts here that if you would answer this out of your own general knowledge, I most assure you it's going to be wrong. For instance, quality control. Quality control oftentimes gets answers like, this is the way that you control the way a product is produced. And it is absolutely not what quality control means. The same with quality management, how well you manage your staff or something like that. It is not quality management. It has a specific meaning, and you guys need to know this very, very well. Okay, now guys, we are going to look again at your missing words there. Quality refers to how goods or services and then the missing word, of course, is going to be satisfy a customer's needs and expectations continuously. Now, guys, oftentimes when I ask my grade 12s, what do you think quality means? They say things to me, the ability of a product to last long. I get that one quite a bit. But it's actually a lot more than that. Whenever you buy a product, you've got a specific expectation of what this product will do for you. And if that product doesn't live up to that expectation, we would then say that this is a product of bad quality. But when you buy a product, you expected something and you get so much more, then we would say that this product is a product of good quality because it gave me a lot of value. Now, guys, I don't know, Mr. Edwards, if you've ever gone to a restaurant and you sit in that restaurant and you know that the food is very good, but you will never go back to that restaurant because the service sucked or something like that. You know, then you cannot say that the restaurant is of quality because something else didn't meet up to your expectation. And all of us have stories like that.
And you'll see a little bit later when we talk about the quality within the functions. There's no point if one of those functions, one of those departments, as you mentioned, the food itself was great, but the service wasn't great, then the business itself is going to fall flat. So it's important that each of these departments is putting quality at the forefront when ensuring their business functions are at the best of their ability.
Right. Guys, so I'm going to the next one. It says it refers to and the word there is characteristics of a product or service that meets the customer's requirements. And I think the restaurant example is a nice one to remember because all of these kids have gone to restaurants. And if you think about times that you've gone to a place where the quality was not good, you can actually think of why it wasn't good. And you can attach this abstract concepts to that experience that you might have had. Quality guarantees the degree of excellence to which a product or service meets the required needs of, and the word there, of course, is the customers. Right. Now, guys, as I said to you, quality control has a specific meaning. And guys, this is something that if I would wake you up in the middle of the night, you would be able to tell me what quality control means. You also need to be able to differentiate between quality control and quality assurance. It is very important that you guys can do this. And as I say, it comes up again in grade 12. Right, so let's look at quality control. Once again, the missing words there. Quality control involves the inspection of and it says there, final. Now, guys, you need to highlight this word. If you ever watched a program called How It's Made, you will see that they will take a sample of products after it has been manufactured, and then they put it through a series of tests to see if this product actually does what it is meant to do. If it fails, then they reject that entire batch and it needs to be remade, because you cannot send products out to the customer that will not exceed their expectation. But the word here is final. It is only the products taken after the production has been completed. The process is done, the final product, to ensure that it meets the required standard. It includes setting targets or measuring performance and taking, and the word that was missing there is corrective measures. I said to you, they will reject it and they will make the necessary adjustments in the process and make sure that the product will be made correct the next time that it comes out. Raw materials, employees, machinery, workmanship, production are checked to ensure that high quality, and the word there of course is standards, are maintained. Right, now guys, as I say, you need to be able to differentiate between quality control and quality assurance. So now you need to see where the difference really comes in. Right, quality assurance means it is the inspection of products should be carried out. Now guys, this is where the difference comes in. During, and the other one that you are missing there is after. So you can see that it's not just products that I take after production has been completed. It's throughout the process. Right, so it's during and after production. This will ensure that the required standards that was set out for the product or service haven't been adhered to at every, and the thing there, of course, is stage. It's throughout the entire process. And it also ensures that every process is aimed at getting the product right the first time and enables teams to prevent, and the word there is mistakes, from happening again. Right. Now, guys, I have already explained to you the differences. As you can see there, explain is the word there. The mark allocation is 4. And if the mark allocation is 4, how many differences do I need? And of course, I would draw a table. I need only one difference, because it's 2 marks for quality control, 2 marks for quality assurance. I will not remember more than 2 differences anyway. So let's quickly see. Mark allocation is 4. I'm only going to give them 1. Inspection of the final product, and of course quality assurance. Inspection of the final product, that's my statement, to ensure that it meets the required standards. That's my second mark. Quality assurance, inspection is carried out during and after the production process. 1 mark, to ensure that the required standards are met at every stage of the process. For my second mark.
If I could just use an example, if you were looking at a bakery and they were baking muffins, for example, quality control would be taking that final product, that final muffin that has been produced, and checking that for the quality standard. Whereas quality assurance would be going back a couple of steps, maybe inspecting the ingredients, maybe making sure that the ingredients are up to standard.
Yes,
and then maybe looking at the equipment, maybe making sure that the equipment's been maintained and is in good condition. Hopefully that would ensure at the end of the day that you are producing a quality product. Okay, so that would be a nice example at looking at the difference if you're looking at for a bit of an understanding.
Thank you very much, Mr. Edwards. Right, so guys, once again, when you have to differentiate or explain the difference, make sure that the difference, of course, is clear. Now, guys, I'm going to go quickly through these things. We are quickly running out of time. It's again filling the missing words. Discuss the importance of quality for businesses. The missing word, of course, there is reputation. Quality enables businesses to have a good reputation and promotes brand awareness. Consumers associate, and the missing word there, of course, was image of the business with the quality of the product. Guys, that's an easy one. If you think of Mercedes-Benz, all people want to drive Mercedes-Benz. It is very expensive. Why? Because they have a reputation for quality products. Right, quality products increase sales, profits, business growth, and attracts prospective, and the word there is investors. And then, of course, the business gains goodwill and support from the community. Right. Okay, suggest quality indicators for the business functions. Now, guys, you have done in term 1 all of those different business functions. You have analyzed 5 of them in a bit more detail, but you had to be able to say what all 8 of them do. So, guys, I'm just quickly going to go through these quality indicators. You will see that in your workbooks that you've got, it's already set out for you. A quality indicator refers to, if I look at this business, how will I determine if they're doing their jobs well? I will be looking at certain things, and that is the quality indicator. Right, so guys, I'm just quickly going to flash this for you. The human resource function, of course, is responsible for recruiting people, and they are also for retaining people and training them and so forth. So that will be the things that I will be looking for if I want to determine if they're doing their jobs well. The same for administration. This administration, of course, refers to the flow of information for decision-making purposes. So I'm going to look at these things in order to see if they are doing that job quite well. The financial function is for the auditing and the bookkeeping and all of that, and also making sure that the business has enough money in order to run the business effectively. So those are the things that I will be looking at. General management, as the picture suggests there, has 4 main things, and that is planning, organizing, directing, and control. And if they do that well, general management will be good. Okay, guys, I'm going to look at production. It is about turning inputs to gain a specific output, and those are your indicators. Marketing, of course, refers to the marketing mix, price, product, place, and promotion, and that is how we're going to link our quality indicators. Public relations, you guys know, purchasing, right? And of course, explain the correlation between management and the success of the business. I'm just flashing this for you quickly. And of course, productivity. So guys, you can pause here and just mark your work if you've done this before. Right, the last one is just a possible question. I'm going to just flash what I have done. Of course, identify for, quoting again. Then I've highlighted the pertinent questions there. Manufacturers, prepares a budget, customer complaints, advertisers, so I could identify those 4 business functions from that. And of course, the motivation is directly verbatim from the case study. Right, so guys, just the last couple of things. Remember the importance of the action verb and the mark allocation to direct your answer. A quote from Eleanor Roosevelt. And of course, guys, these are the sources of our information. And we thank you for spending your afternoon with us. And I hope this has been helpful to all of you. Mr. Edwards.
Thank you very much, grade 10s, and all the very best for your control tests coming up.